Hi friends, welcome back. This is Prithvi, and today we'll be talking about individuals who are looking at investing into real estate but are seriously concerned about hassles which are associated with investing in real estate. So if you're looking at buying a real estate property, be it for a long term or to generate a rental income, there'll be some big problems which everyone faces. First is you have to deal with the broker because no one knows the best properties available which are there on the market. Is the price right or not? There's a very high stamp duty. The properties are mostly not transparent. Apart from that, individuals don't have the expertise which are required to do a due diligence, do a legal backup checkup of the property. When you are looking at buying real estate, a very, very big factor which comes into play is the amount of investment which is required. Crores to spare to invest into real estate. And if you're planning to buy a good rental property, which is in the central business district, you would require crores of money. And everyone doesn't have that. But there is one way where you get all the benefits of investing into real estate and without any of these headaches. That option is to invest in REITs, Real Estate Investment Trust. What are REITs? So REITs, like friends, are like mutual funds, but rather than investing into publicly traded companies, you're investing into real estate. Everything else remains the same. You can invest in small units, right? They're easy to invest into, they're easy to exit, they're completely transparent because they're governed by SEBI. And like a mutual fund, REIT is actually created by a sponsor who transfers all the ownership of the assets to a trust in exchange for its units. So it's basically very similar to a mutual fund. India actually saw its first REIT come up in 2019. 2 years later, we actually have like 3 REITs which are there in the market for people to invest. One is Mindspace, one is Brookfield, and other one's Embassy. All of them are listed. You can buy them on the stock exchange. How do they earn their money? They earn their money in 2 ways. One is rental income, and the other one is in form of capital appreciation. So they can be investing into real estate projects. They'll be investing into rental properties. So they'll develop a property like a mall or a hotel or a resort, and they'll earn money from it in form of rents. So let's move on to seeing what are the benefits of investing into a REIT and what are the risks which is associated with it. So very good thing about REITs is the SEBI regulates them. It has to give out 90% of their cash flows to investors. So whatever money they get, 90% of that money has to go back to the investors, the unit holders like you and me. Apart from this, there's a very less execution risk. So in real estate projects, what happens is there's a lot of risk associated with whether the builder will be able to complete the project or not. So what SEBI has mandated that 80% of their assets has to be into completed projects and into projects which are generating income. Income means generating rent. So your money actually is very safe in these investments and your execution risk comes down drastically. So these are the big advantages which are there in a REIT. First, you get diversification. So as an investor, if I'm looking at buying a property, I'll only buy a single property. I will not have diversification in my real estate portfolio because the amount of money which is required in it is big, right? So if you want diversification, a REIT is the way to go. Second is, if you have a small amount of investment, you can invest into them with the amount as less as 50,000 rupees. Now, no one in their right sense of mind can actually think of investing into real estate until they don't have crores of rupees, if not less. You get your property to be professionally managed, right? So this ensures that there's smooth operation. There's no effort in terms of landlord problems which you have with your tenants. It's going to be a regular income generation because 90% of whatever rent they're getting has to be paid out to the unit holders. It's capital gains. Now REITs are listed on the stock market and their price obviously depends on their performance. When you sell it, you can actually generate money from capital gains. And there's a very tax efficient way of holding income generating real estate assets. Another thing is with inflation, you will get good capital appreciation from your investments into REITs because with inflation, rentals will go up. With inflation, prices of these properties will go up. And you can get a good return on your investments because inflation is going to have a positive impact on real estate prices. So REITs will also, being real estate investments, will benefit directly from inflation. Now because REITs are a new phenomenon in India, there are very few REITs which are available in India. So there's there are limited options, only 3 options which are available for you. Hence, buying and selling REITs, there can be some problems, especially there might be liquidity issue as to which investors want to exit. They might not be buyers for your investments at that point of time. So when we're looking at evaluating these 3 REITs, we actually have to look at certain parameters to judge these REITs. Like as in stocks, we look at what is the PE ratio, what is the EPS, and what is the growth of a stock. In REIT, we look at other things. So we look at weighted average lease expiry, which stands for Wale, not as in sense the blue whale, but Wale. It tells you how much of the property is left for it to go vacant. So how much is the duration in terms of years for the lease to expire. What is the distribution yield? By distribution yield, we mean how much of the rental income it is getting and how much of that money is actually given out to customers. Third thing which we look at is loan to value. Obviously, less the loan, safer is your investment. And we look at what is the occupancy rate of these properties. Higher the occupancy rate, the better it is. So something which is 100% occupancy means all the resorts or all the offices are 100% occupied. Apart from that, we look at how diversified their portfolio is. So if their portfolio is across, is obviously exposed to certain small amount of companies, or only 2-3 companies are occupying most of the office space, obviously there's a higher risk which is associated with the REIT. We look at what is the net asset value. What happens is a certain part of this money which comes into REIT, or the value, net asset value which comes out, it comes from what is the property value. So right, there's a rental income which is coming in, and there is, like after completing a project and the project is sold off, certain big capital appreciation is going to come in. So net asset value and the difference between the market price is also important. What is the NDCF, which is the key matrix, which is the money which is left to distribute to the unit holders. SEBI actually guides that 90% of it has to be given out to the unit holders. If the sponsor is a big company like say a Raheja, a brand recognition comes in, there's a trust which is associated with that brand. There's obviously delivery issues whether this sponsor has had delivery issues in the past. We'll also look at taxation because REITs are actually a very tax efficient way of holding real estate. Now, as I've told you, there are 3 REITs which exist. Now, let us look at these REITs into detail and see which ones we can invest in depending what we want from our investments. Are we looking at capital appreciation? Are we looking at generating regular income? Depending on what we are looking for, we can choose among one of the 3 REITs. One is Embassy REIT. It is sponsored by Embassy and Blackstone. It is the largest REIT in India by area. It operates close to 42.8 million square feet. It has 8 office parks. It has 6 hotels. 2 of them are under construction, and a 100 megawatt solar plant. So there's a good diversification. Majority of its investments are in Bangalore, which is a very big market for it. So 74% of its investments are in Bangalore, because Embassy, as you know, is a real estate development company based out of Bangalore. It has 10% in Bombay and 9% in Pune. The top 10 tenants contribute to around 39 to 40% of its rental incomes. And as I said, what is the lease to expiry? That is around 7 years for them. So it's a very good and one of the best REITs which is there. Now let's move on to the second one. The second REIT is a Mindspace REIT. Mindspace REIT is managed by Raheja. It is across Mumbai, Pune, Hyderabad and Chennai. It has a total leasable area of 31 million square feet. Top 10 tenants contribute to around 36% of its rentals. It has an occupancy rate of around 84%. It is a very stable REIT, and if you are looking at investing into a project which has a good cash flow, so Mindspace is good for people who are looking at investing into real estate from a rental point of view. Mindspace helps if you're a conservative investor. The question which arises is like, should you be investing into REITs or not? So my suggestion is, if you're looking at investing into real estate and do not want to get any exposure to all the headaches which are associated with the real estate investment, the REIT is actually a very good option. You can get good returns from the REITs. They're well managed. Your investments are very safe. You can get a regular income without spending crores of rupees, right?